Well, joining me now is Jason Horn from Steyn Capital Management to give us his take on market activity. Jason, good to chat to you once again. Now, Richemont, we spoke about that earlier. Q3, your thoughts?
Yeah, thanks, Ray. Looks like a very solid update. I mean, considering they are comping a very strong prior year. As you mentioned earlier, solid growth across all the regions, particularly in the US. Yeah, some interesting numbers out of Japan as well. 17% growth there, which was quite surprising considering the tensions we have seen with the likes of China and Japan. But yeah, so a very good start to the stock's performance this morning, but it has given all of that back and some, as it does seem the street is starting to get concerned around margins. And I mean, the reality is the boost in sales that we have seen has come from price hikes. So as tariffs continue to weigh, currency headwinds and the like, as well as higher raw material costs, there are questions around the sustainability of that growth going forward.
Yeah. All right, UK GDP up. It wasn't expected to be that good. I think it's probably because Jaguar Land Rover's back online again, that horrible virus attack or cyber attack that shut them down. So they're back online now, and that's good news for the UK.
100%, right? It's actually quite a strong beat as a direct result of that. I think overall, yeah, the UK economy and the Labour government have seem to lurch from one issue to the next over the last year or so, but it does seem that they're through the worst of it, and the weakness that we've seen in the economy looks like it's going to be temporary. So obviously we've had the issues with the cyber attack, the strikes are starting to unwind. However, one mustn't get too optimistic. We're still waiting to see what the impact of what Chancellor Reeves' budget and that £26 billion tax raise will have on the economy. So, look, I think the likes of the BOE is aware of this in terms of rates. And then the question remains, what is the consumer going to do going forward in the UK? Will we see that recovery as rates continue to trend downward?
Gosh, lots of pressure on her at the moment, Rachel Reeves. All right, Donald Trump, never a dull day, 25% tariffs on AI now. He's going everywhere.
Absolutely, but I think this one makes probably a little bit more sense, right? I mean, this is on the back of that probe that they've conducted over the last 9 months or so, and this does pose a national security risk to them. So, I mean, if we just take a step back and zoom out and look at the semiconductor industry, Taiwan has a 60% market share on all chip production. And if we look at specifically the more advanced, smaller than 7mm nodes, that's a 90% market share. And the US is only able to produce at the moment roughly 10% of what they actually need. So given Taiwan's proximity to the US's largest geopolitical rival in China, this is a risk. It is a tail risk, of course, not saying anything's going to happen there, but it's clear that even though they are probably the leaders in chip design, they want manufacturing there as well in the US. I mean, the likes of we've seen that investment into the US plants in Arizona, and this is just another incentive that the US is trying to provide in terms of local production and diversify away from that concentration risk centering around Taiwan.
Yeah. Look, I mean, that H200 chip, that's their pride and joy. They've got to protect themselves. They've got to protect their trade. So there you have some tariffs now. You've also been watching TSMC. What have you seen?
Yeah, look, Ray, TSMC, exceptionally high quality company. And despite all this uncertainty, they've just beaten and they've also raised guidance again. I mean, this is a winning streak of 18 quarters now that they've beaten guidance. Look, and just diving into some of the numbers, I mean, AI revenue is expected to increase by 56% per year over the next 3 years. It's quite incredible. Look, hyperscale investments into data centers do remain a concern, and there's always going to be this question around how sustainable this demand is. But I mean, TSMC's order book for the next few years are they're quite confident with that. And I mean, this next year alone, they're going to need to spend in excess of $50 billion in capex to keep up with that demand, and they're going ahead with that. So I think for the short to medium term, it does look like that demand is sustainable for them. And yeah, it's a very, very good set of quarterly earnings.
Gosh, interesting times. Jason, the JSE at this hour, I mean, what are you watching? I was talking about there's a whole spread out at the moment. The all share relatively flat, though. I mean, We Buy Cars is doing well, some of the others as well. The miners, Alphamin, are doing well as well. It just seems like the same picture from Monday through to Thursday.
Absolutely, Ryan. I mean, let's not forget the large proportion of miners within the index now, given how well they've performed over the last 12 months or so. And it does seem that we started in that vein again. And just, yeah, there's a lot of volatility in precious metals in particular, in terms of pricing. So we're seeing that, and I guess most of us are kind of watching closely and waiting for this pickup in SA Inc., which we think is going to happen.
Yeah, no, absolutely right. Jason, hold that thought. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
It's one of those years when we started off by looking at the rand, looking at the positivity around South Africa. I mean, we haven't chatted about this, but this whole thing about the government looking to maybe change the whole way prime is calculated. That could be a very, very interesting theme for this year, because I mean, that let's call it that 3.5%, about the repo rate was always there since 2002. It's never been questioned. If suddenly we get a few questions and they maybe alter that downward, this could also be very, very good. Sort of a drop in interest rate without a drop in interest rates. But that's still ifs and buts. We're seeing the rand at better levels. We've seen the petrol price now at one of the lowest levels we've seen it in years. Now that I do feel is going to move its back way into the economy, specifically first start, usually your food producer. So Shoprite, when I look at Shoprite over the last 10 years, it's still trading at one of its lowest forward multiples in let's call it in the last decade.
I love Pepco. It sells affordable clothing, everything, household goods, and now it's financing smartphones, microloans, you name it, especially to the unbanked people and the informal economy. And I think they're doing an incredible job. And I think that's becoming the very benefit. The strong area of this market is down below there. I know it's not my best. I would like the bar to be higher, but this is where we're going. But I like what Pepco is doing, and really challenging the incumbents in the market. Capitec led the way, but just Pepco has always been one of my favorite companies.
Right, Jason, these are two stock picks we've seen before. These are I call them the usual suspects. But I mean, Shoprite seems to be doing so well.
Absolutely. Look, Ray, I think both of these are what you would call the must-own best-in-class retailers, and that's why they will continue to come up over and over again. Look, they are dominant in their spaces, and the reality is they are better at execution than their rivals. And I think also what's quite relevant now is we can think that they are both less impacted by the likes of Temu and Shein, given their lower LSM target. And I think we can also make the argument that should we see this overall consumer recovery, lower rates, that should be good for retail in general, and you want to own the best-in-class retailers in that instance.
Yeah, they're the same WhatsApp group. Right. Now, your stock pick, what are you choosing today?
Yes, I'm here to pound the table on emerging markets, Ray. I mean, look, even after the past year's strong performance, EMs relative to the S&P 500 remain close to historic extremes. I mean, it is actually still below levels last seen in the Asian financial crisis in the late 90s. And we're only modestly above its all-time low, which was in December 24. Yes, the US dollar has been weaker, but on a historical basis, we still have a long way to go on the dollar to get to what we would call normal levels. And we couple that with rising commodity prices, think of gold, copper, nickel, platinum, silver, uranium. The historical ingredients for significant EM outperformance are once again in place. And these bull markets typically run in lengthy cycles and last years, not a case of months. So, and one mustn't forget, if we look at history, the last EM bull market of the 2000s saw EMs outperform the US market by 17% per annum for almost a decade.
Right.
And within that, we can say, well, we've actually got 40,000 listed companies in the frontier and emerging market space. So there is a lot of opportunity out there in emerging markets for investors.
There we go. EMs it is, emerging markets. Jason, thank you so much. Good to chat to you once again. We'll speak to you again very soon. That was Jason Horn from Steyn Capital Management.